collaboration with Chapel Hill Denham, the CSCS, and the Association of Stockbroking Houses of Nigeria, ASHON. And we're delighted to collaborate with all these organizations to make this happen today. So we will just give another minute or so to allow people to join in, and then we're going to get right into it. And just to highlight the flow, we're going to have a couple of speeches and presentations, and then we'll get into a panel conversation where we'll dive deeper into the theme of the event. And that will also give you the opportunity to ask a couple of questions. And as you do so, I want to encourage you to please use the Q&A field so that your comments and questions are not lost in the chat field. But in the meantime, please feel free to let us know where you're joining us from by typing a short message in the chat field, and you're all very warmly welcome. So we're going to move things around a little bit. Typically, we should have the acting CEO of the Nigeria Exchange, Mr. Jude Chiemeka, deliver his opening address. But because of some constraints we have, we would like to move things around a little bit and have Mr. Farouk Oreagba, the CEO of NG Clearing, to deliver a short goodwill message around this topic. So I'm going to pivot now to him to do just that. So Mr. Oreagba, it's over to you.
Good morning, everybody. It's a privilege to be part of this educational series. Specifically when we're talking about trading rights. As far as the investment community is concerned, the trading of rights is a great opportunity for those who currently hold stocks. What people don't realize is, they get these rights, they don't know they can trade them. They need to understand that a rights issue is normally issued at a discount to the prevailing share price. So there's already an intrinsic value in the rights, and that value can be traded. So, I really appreciate this series so that a lot of investors don't leave money on the table. And this is all part of the efforts of the Nigerian Exchange, NGX group, to bring investment opportunities to the public. And I think it's very, very welcome. So I think particularly at this moment in time, I think it's going to be beneficial to most people. I commend the Nigerian Exchange Group for what they're doing, and Ashon and Chapel Hill, and hopefully we'll have more of these educational series, thereby enlightening the investment community so they can appreciate what the Exchange Group, Nigerian Exchange Group, NGX Group has to offer. So it's a welcome development, and I wish everyone the best in this series and the rest to come. And I can assure you, in due course, there'll be more to come, including derivatives and the like. So it's a welcome development for which I'm privileged to be part of. And thanks for accommodating me to shift the series round. As you can see, I'm in skis mode this morning, so forgive me. And I thank the Exchange for inviting me, and I look forward to further participation in the future. Thank you very much, guys. Good luck.
Thank you very much, Farouk. Looking very good in your traditional attire. So I imagine there's some rest and relaxation at some point.
I hope so.
Wherever you're at now. So please have a great time.
Thank you
so much, though, for jumping in and sharing your perspective on this opportunity to discuss trading rights.
Thank you. Good luck with the series. Thank you.
Thank you very much.
Cheers.
Okay, again, I want to just reiterate that we look forward to welcoming your questions and comments. So as we proceed during the event, I want to encourage you all to please use the Q&A field to drop your questions and comments. So to set the tone further for today's event, I'd like to now welcome to deliver his opening remarks the Acting Chief Executive Officer of the Nigerian Exchange Limited, Mr. Jude Chiemeka. So Jude, it's over to you, sir.
Thank you so much, Wale, and thank you, Farouk Oreagba, own celebrity. So a very good morning to you, distinguished ladies and gentlemen. On behalf of the board and management of the Nigerian Exchange Limited, it gives me the utmost pleasure to welcome you to this webinar with the theme Trading Rights, What Every Investor Needs to Know. This event is one of the Exchange's Investor Education Series initiatives. It is pertinent to state that the webinar is quite apt and timely, given the recent developments in the Nigerian financial market space. The Apex Bank, Central Bank of Nigeria, has mandated banks to recapitalize their operations. This recapitalization will result in the emergence of stronger, healthier, and more resilient banks, thereby supporting the achievement of a $1 trillion economy by the year 2030. Bigger banks with larger capital base and capabilities can underwrite larger levels of credit, thereby providing a pathway to the revitalization of the economy. The NGX has the utmost platform for capital formation in Africa and is properly positioned to provide the necessary support to market operators, banks, and the government to achieve set goals. Our history as an exchange gives credence to our novel contribution to the success of the banking sector recapitalization over 20 years ago in 2004, which has been one of the major pivots for a stable financial system in Nigeria. It is heartwarming to inform you that the exchange, through first-in-class bespoke technology, is well poised to support this cycle of capital raised by banks and other issuers listed companies in diverse sectors as they fall through. Data from KPMG estimates that within the 2024-2026 window for the banking recapitalization exercise, an aggregate of over 4.2 trillion naira in fresh capital injection is required to satisfy the new capital requirements across all types of classes of banks. Right issues are one of the preferred means by which they could be seeking new capital injection to fulfill the Apex Bank's requirements. Other listed companies in other sectors have also been quite active in this space. Year to date, total rights issue prints at 3.6 billion naira, likes of Ella Lakes, Sovereign Trust Insurance, etc. Hence the reason for this all-important webinar, just to allow investors to understand the rudiments involved, because there will be situations where you might need to take up your rights. How do you go about that? And if you do not have enough liquidity, what then happens? Can you sell those rights for cash? And if you have sufficient liquidity and you then want to buy more, how do you go about it? Those are the things that you'll be learning from this webinar. This webinar presents a unique opportunity to deepen investors' knowledge about rights issues, options for investors during rights issuances, trading of rights, and the settlement process. Due to the importance of the subject, seasoned capital markets professionals have been carefully selected to delve into today's discussions. I'm very enthusiastic about the impact this webinar will have on the investing public, both institutional and retail. And to be honest, our retail investor base has grown significantly. Of the portion of domestic participation in the market, which typically was around 30%, the retail participation has trended up significantly to 49% of total value of domestic trades that are done. And so I believe that they will certainly be gaining a lot from this conversation. They will be well informed with the right information and resources to navigate the market, as we expect a flurry of rights issues to hit the market soon. The exchange, no doubt, remains highly invested in providing an efficient, liquid, and transparent market for investors and businesses in Africa to access capital and build wealth. We are truly pleased to host this event with our apex regulator, the Securities and Exchange Commission, Chapel Hill Denham Securities, Central Securities Clearing System, and Action. I therefore encourage all participants to actively participate during the Q&A session and leverage this platform to expand their knowledge base about trading in rights and opportunities therein. Once again, I extend a warm welcome to everyone on this call, and I look forward to an enriching discussion and valuable insights to be drawn from this webinar. Thank you very much.
Thank you very much, Jude, for those opening remarks. And just to reiterate the point that he made, this is an educational session, and we look forward to having you all chime in, ask your questions, and so we leave the event much more informed. As he did mention, we are also delighted to collaborate with the Securities and Exchange Commission to host this event, and we have the pleasure of now inviting to deliver a keynote address, Executive Commissioner Operations at the SEC Nigeria. Please, I will now pivot and yield the stage to Mr. Bola Ajomale. It's a pleasure to have you, Bola.
Thank you, Wally. I hope you can hear me well.
Yes, loud and clear.
Excellent.
Please
Acting CEO NGX, representatives and co-sponsors of this webinar, participants. It's a real pleasure to deliver this keynote at this very important time, understanding trading rights in the secondary market. I'm really happy that NGX and its partners will bring it up at this time, and it couldn't have been better timing. Operators really do need to build and sustain investors' confidence in the market, and we're anticipating a significant amount of growth over the next couple of years into 2023. The acting CEO just mentioned a number of 1 trillion, an economy of $1 trillion by 2023. And the capital market plays an absolutely central role in realizing this. As he mentioned as well, about 4 trillion is earmarked to go through our market, to come in fresh into our market over the next couple of months in the banking program. And in addition to the offers for subscription, rights will be probably the preferred option for quite a few of these banks. Indeed, over the last 5 years, we at the Commission approved 25 rights issued. Value of those was about 303 billion, and now we're looking at doing about 4 trillion, of which I would anticipate maybe 50% of it would be in rights. In this year, out of the 6 capital raises that we have seen, 4 of them have included a rights element. So again, I must commend the foresight of the organizers in putting this together, because rights issues will continue and are becoming a significant means by which we'll achieve these numbers. As you know, a rights issue creates some opportunities for shareholders. They can maintain their stake in the company and avoid being diluted out. They can benefit from a discount on the share price as the shares are being offered. And it also allows the company to protect itself from the possibility of being acquired by new shareholders. And if a shareholder does not want to take his rights, he can renounce and sell them, or he can outrightly rescind the rights and not have anything to do with the company. In both cases, what happens if they do rescind, and if a majority rescinds or renounce, then what tends to happen is that the company is now open to take over, or it may fail to meet the capital that it requires, that it's required to raise. So it's important that when a shareholder renounces, they then have an opportunity of transferring those rights over to someone else, which is obviously by means of trading them on an exchange. There's some very important aspects that we need to look at, and maybe I think I'll wait for someone to mute. Can we just mute so we don't just get distracted? But where a shareholder wants to renounce, then there's an opportunity to offer the shares the rights to be traded on an exchange and being settled in an organized manner on the CSCS, which is the depository for shares being traded. It is important that the registrar only a registrar can verify the rights. Only a registrar can lodge them with the depository before they can be tradable on the exchange. Now, because we're so clear and focused on ensuring that there is a smooth and transparent and efficient capital raise exercise, especially going into this next year, I want to call our attention, and I must call attention to our rules and regulations, the Consolidated Rules and Regulations 2013. Part F2 of the rules, the sections between 324 and 328 and 338 specify some things about pricing, trading, and settlement of rights issues that I would want to highlight. In section 325, it specifies that all securities offered by way of rights shall be tradable by the holders thereof only during the offer period. You cannot trade your rights anytime outside that offer period. 326 says the issuer must identify the period within which the rights will be tradable on the securities exchanges. In other words, there's a segment of time during which those rights will be traded, and the rights holders must act within that period. Otherwise, they may lose even their rights to act. 331 says a stockbroker must receive a written instruction to sell a shareholder's rights and a right offer sale form as well, signed by the shareholder, indicating the quantity of rights the broker is authorized to sell before execution. Now, again, this ensures orderliness in that a stockbroker cannot sell a right holder's rights if that right holder has not given a written instruction and if they have not filled a sale order form. Again, it allows tracking, it allows transparency, it allows accountability, both on the part of the intermediary and record for the rights holder as well. 336.3 says all stockbrokers lodging on behalf of purchasers of rights in the secondary market shall complete normal return forms in remitting payment to the receiving bank. And 4 says stockbrokers shall file with the commission on the prescribed return forms rights traded. In other words, there will be a record of every single right that is being traded on the market, and it'll be clear. Again, I will add that we at the Securities Exchange have the belief that every rights holder must have the rights to must have an opening to secondary trade of the rights, provided the company is a public company. So while once in a while we see cases of companies saying they are preemptive rights and there is no right to a secondary market, we believe that there should always be a secondary market available to public securities, to any public security if they are conducting the rights issues. Intermediaries involved in this settlement process must be registered by the Commission, and because of that, the Commission has also put in place a very robust complaint management framework, which will resolve any kind of concerns or disputes that arise from trading of the rights, from trading or settlement of the rights. So in a nutshell, I will reaffirm to all stakeholders that the Commission is very determined to ensure efficiency, fairness, and transparency in the capital raise process. And as you begin to examine this theme of this webinar and try to deepen everyone's understanding of trading of rights, I would also personally like to reassure you that the SEC expects to receive your recommendations, will act on the recommendations, and encourages as much innovation in this process as possible within the framework that has been put in place. So I will just end by thanking you for the invitation to be a part of this discussion, and I wish you very fruitful deliberations. So thank you very much.
Thank you very much, Mr. Ajomale, for that keynote address. And we deeply appreciate the SEC's collaboration with the Nigeria Exchange and, of course, the broader investment community to see how we can deepen this very important aspect of the markets. So essentially, a right is the early steps, if you like, of derivative markets that we're trying to institute in Nigeria. All right, now we'd like to move on to a presentation where we would dive deeper into the modalities of trading rights, understanding the whole point of this. And to deliver that, We are joined by the Managing Director of Chapel Hill Denham Securities, Mr. Akim Shadare, and the theme of the presentation is Understanding Right Issues, Investors' Strategic Options. It's over to you, Akim.
Good morning, everyone, and thank you, Wally, for first of all, I would like to acknowledge the Executive Commissioner of the Securities and Exchange Commission, Mr. Bola Jomali. Morning, sir. Acting CEO of the Nigerian Stock Exchange, Mr. Jude Chiemeka, and also Mr. Faruk Oriagba, the CEO of NGX. City gentlemen, investing public, good morning. It gives me great pleasure to deliver this presentation, and I think this presentation, as highlighted by the previous speakers, I think is important at this point, given what is going on in the Nigerian economy, right? To give this important presentation on right issue. First of all, I would like to start with just giving an overview of how companies can raise capital. You see, there are various ways depending on what the capital is meant for. So basically, banks, they can use banks to raise money, and they can also use capital market. Capital markets are mostly for long-term capital, basically. For banks, typically within 5 years, amortizing process where part of the principal and interest are being paid and reduced. Usually an average lifespan of 2.5, 2 years and 2.5 years, basically. In capital markets, there are various ways you can raise money in the capital market. Number one, depending on what you want to use the capital for, if you want to raise money for working capital, right, you can look at commercial paper, which can be maturity between 90, 60, or 180 days. Then for the wider community to invest in it, more often a credit rating will be required. So this one, please, can everyone mute, please? Can everyone mute, please? Thank you. So another option is the private market. The private market is somewhat faster because you don't need an approval from the SEC for that. What you really need for the PFA, which we all know that they are the biggest asset managers in Nigeria, you need credit rating, at least minimum of 2 credit rating, and a income certificate for them to participate. Usually, a debt private placement is usually shorter than bond issuances. For bond issuances, longer SEC requirement is needed. Domestic rating by 2 rating agencies also required. Income certificate is required for the pension industry to participate in that. Usually what you will see, and based on my experience and the things that we've done in Chapel Hill, right, mostly they are usually a shelf offer where the program is being registered by the SEC. There is also an option of issuing dollar instruments. Maturity could vary between 5 to 7 years. For liquidity purposes, usually recommended that the size of the offer should be large enough so that it can be included in relevant indices that major portfolio managers globally follow track, basically, and credit rating from an international rating agency like Moody's and S&P is required. Another way of funding is also through access to specialist funds. As a firm, Chapel Hill, we are leading the initiative in this space. Currently, we have a Nigerian Infrastructure Debt Fund listed on the floor of the Nigerian Stock Exchange. So, as a retail investor, you can go to the secondary market, contact your stockbroker, and buy it. Also, there is the whole essence of the fund is towards a specific purpose, infrastructure in this case. And we also have And another example is, real estate fund, Nigerian real estate investment trust, which it's also
And they slow down the
a
network.
a product
This
a
is
product by Goodwill as well.
happened.
Then there is an hybrid where an instrument, like a debt instrument that behaves like an equity. A classic example is AT1, additional tier one capital, mostly for banks. Currently, we've seen two banks issued that in Nigeria, and as a firm as well, Charcoal, were privileged, to help those banks. Access Bank issued 81 in USD, and also FCMB did that over the past few years. Then on the extreme right is the equity space. Under equity, it becomes a form of right, which is the topic for today, public offers and private placements. So understanding right, so I'll just give a brief definition around what a right is. So a right is the way in which companies raise additional capital by giving existing shareholders privilege at a discounted price. I think it's also very important that if a company feels that the price is not right, they can actually trade or issue the right above the current market price. As we speak today, there is no law that says a company must issue at a discounted price. And I think it's also very important to know that if a company feels that the value of the value of the company is on the price, they can actually issue something slightly higher than where the market is. So rights typically are tradable, right? As long as the company is listed on the floor of an organized market, in this case, Nigerian Stock Exchange, it can be traded on a recognized exchange. There are also some times where rights are not transferable. In that case, it's mostly for private company, which is not part of what we're discussing today. Then rights are usually offered in fractions. So if you say a right is being issued 10 for 1, 10 for 1 means for every 10 shares you have an additional 1 share, right? And they are kind of preemptive. Preemptive meaning this capital raise is offered to the existing shareholders first before the general public. So I'll just quickly go through the timeline of rights issue. Before a right is the initial step is that the shareholders will have to approve in an annual general meeting. There's also the option, if the annual general meeting has passed and they need to do it, they can also approve it at an extraordinary general meeting. A record date is being set. A record date is just like when a qualification date for dividend payments. Holders of record as at that date would be entitled to this, incentive basically. An approval will seek from the parties involved, usually the bankers, would have to seek an approval from the SEC. The broker would work with NGX on approval and also CSCS. CSCS usually creates a symbol for the right. And during the period of trading, typically 28 days, which can also be subject to SEC approval, can be extended. The shares can trade, the rights can trade normally like, you selling shares. It also settles T+3. At the close of the right, after the 10-day window for receiving banks to do reconciliation, CSCS would debit the stockbroker's account, right, with whatever amount it is. And that amount will be during the right process trading, what is being exchanged in terms of monetary value is just the premium. I'll speak more to that later. This is just a summary of the flow. where at the end of the offer, 10 days after reconciliation, CSCS will advise all stockbrokers for the rights traded on the floor. And the settlement account will be debited and the offer account will be credited. So how do you participate in rights issue? So as an existing shareholder, you have two options. Number one option is to follow through on your right. Number two option is to renounce the right. Number one option is you can buy the right. You can buy everything that has been allotted to you, right? And in most cases, most strategic investors will do that so that to avoid dilution. I know the Executive Commissioner had also mentioned that earlier. Then, if possible, given that the shareholder can also apply for additional rights, but given that we're talking about trading, right, the existing shareholder can also come to the floor to buy traded rights on the floor of the Nigerian Stock Exchange. The reason why this is important is that the shares bought on the floor of the Nigerian Stock Exchange, the rights bought on the floor of the Nigerian Stock Exchange guarantees allotment, because for shareholders following up with their rights and applying for additional right, there is no guarantee, because if the offer is fully subscribed, there is a good chance that the shareholder might not be able to get the allotment what you really want. The other the other option, right, is to follow through with what has been allotted to you. And the third option is a partial application where the shareholder decides to sell the right, which I'll speak to under renunciation, to sell the right, to use the proceeds of the right to participate in the offer, basically. So that's under the existing shareholder I mentioned earlier. They can follow through or they can renounce the right. So by renunciation of the right, the existing shareholder is saying, I don't want to participate in this, right? So he has two options: can sell some of the rights. You can sell all the rights. By selling all the rights, it means you are just getting the premium on the. I won't go into the technical side of, how the price is being determined, because at the end of the day, irrespective of where the theoretical expiry price is, the forces of demand and supply will determine where the premium lands. So the shareholder can decide to sell everything or decide to sell some of it to fund his participation. So he can decide to sell 50% of the rights, whereby using the proceeds from the sale to fund his application, basically. The other alternative is for shareholders to do nothing. And this is not usually encouraged because, at the end of the day, what the shareholder has done is to leave money on the table. Then for new shareholders can participate by going to the floor through their broker and buying the rights on the floor. Like I said earlier, rights bought on the floor guarantees, as long as the shareholder follows through, guarantees allotment. So what is right trading? Just some important things to mention around right trading. I had mentioned record date, which I had mentioned that it's very similar to dividend payment, where the date at which the qualification date, any shareholder in the book of the company, the register of the company, would be entitled to the privilege given. Right trading basically is the right to invest on a preemptive basis. Right trading description. So right, basically, like Wale had mentioned, is somewhat a derivative, is an option to invest, but it is not mandatory. So you can decide to go to the floor of the Nigerian Stock Exchange, buy the right, and you can decide not to follow through. If you decide not to follow through, then what you are really losing is the premium paid for the privilege, the premium paid for the option. So at the end, and it's also very important that once the offer closes, the right is useless. It has zero value. So right trading. So I had mentioned earlier that as a new investor, right, this is just to run through the timeline of what the process looks like. The shareholder, the new shareholder can go to the floor of the Nigerian Stock Exchange to buy shares. If the new shareholder does not have a CSCS account, he will need to open a CSCS account, right? Send the mandate to his broker to purchase the rights. At this point, is paying the premium. That's what the debit will be, is only paying the premium. But at the settlement at T+3, the right moves to the new buyer. And after the offer closes, the consideration, the price, which is depending on if you assume that the premium was 1 naira, at the point of trading and T+3, when the trade settles, 1 naira premium would be debited, while the credit would be the right itself. Then at the point of where the offer closes, the shareholder will be required by his broker to pay additional the price of the right. Let's say the price of the right was, let's say 5, then you'll be required to pay the 5 naira. Then for existing shareholders looking to renounce their right, so the first step, like also I think the executive commission has made my work a bit easier in this space, and also quoting the relevant laws in the SEC as regards to this process. It has to be verified by the registrar, right? So sometimes your stockbroker would ask you for intermediate transfer form that it has to be signed. It's the registrar that advises the depository, in this case CSCS, to credit the existing shareholder that has decided to renounce his right to credit his account. Then the existing shareholder sends an instruction, just the way you are buying, just the way a new shareholder will send an instruction to a stockbroker. An existing shareholder, after renunciation, sends this to the registrar. The registrar sends, after verification of the identity, CSCS credit, then a mandate is sent to the broker to sell. The trade is done on the floor. T+3, the proceeds, which is the premium, right, goes to the existing shareholder, and the verified rights in the CSCS moved to the buyer. So once the SEC approves the allotment, the new shareholder gets credited on the shares. Credited with the shares, rather. Thank you, everyone. Wally, back to you.
Yes. Thank you very much, Akim, for that very enlightening presentation. I see that your last slide has Q&A, but what we'll do is that we'll save those Q&A segment for after the panel conversation, which we are going to pivot to right now. So a lot of very valuable information has been shared so far by Akim, but now we want to take it a step further as we invite our panelists to share their thoughts on trading and settlement of rights in the capital markets. So we're going to be getting a market operator's perspective. And so I would like to invite a few other speakers to join Mr. Akim Shadare, the Managing Director of Chapel Hill Denham, and Mr. Bola Jomale, the Executive Commissioner of Operations at the Securities and Exchange Commission, in this panel conversation. So first I will be, First I'll be inviting Mrs. Onome Komolafe, Divisional Head, Business Services and Client Experience at the CSCS. Thank you very much, Mrs. Komolafe, for joining us. We also have Dr. Mrs. Catherine Nwosu, Managing Director at Africa Prudential PLC. This is a registrar company, and she'll be sharing the perspective of a registrar as we dive deeper into this conversation. And last but certainly not least, we have Mr. Abimbola Babalola, Head Trading and Products at the Nigeria Exchange. So, ladies and gentlemen, thank you very much for joining us for this very valuable conversation. So, I have the pleasure of moderating this session, and I'm going to get right to it. But again, I just want to reiterate that if you do have questions, please type them into the Q&A field. I see that we already have some participants doing that already. So I would like to go, first of all, maybe back to Akeem, just to provide a little more color on your presentation. If you can just briefly discuss how investors can trade their rights in a practical way through their stockbrokers. I see that we even have a question related to that in the Q&A field already. And then, of course, maybe you can also highlight the benefits of doing that, because like you pointed out during your presentation, not doing so and not taking up the rights is tantamount to leaving money on the table.
Thank you again, Molly. So for an investor, like I mentioned in the presentation, an existing shareholder of a company has two options. Number one option is to take up the right. Number two option is to renounce the right. They are looking to take up the right. They can decide to, they fill the form, right? After filling the form on the application, they can decide, to apply for more shares. And I also mentioned, during the presentation that, there is a risk in applying for additional shares, because if the offer is oversubscribed, right, there is no assurance that the shareholder will get. So the best thing is, if you are looking to buy additional shares and ready to pay the premium, you can mandate your stockbroker to go to the floor of the Nigerian Stock Exchange and buy more rights. The other alternative is to just take up the rights being given to you, right? That's the second alternative. The third alternative is you decide to renounce the right. So if you decide to renounce the right, you can do partial renunciation. If you do partial renunciation, you can actually sell the right and use the proceeds to fund, your allotment. And the option that like you rightly mentioned, not doing anything, you're actually giving value on the table, and there's a risk of dilution as well. So, for example, if a company is doing a 1-for-1 and you're a strategic investor, if you don't do anything, you're not getting any money on it, and you still don't want to participate in the right as a strategic investor, the ratio was 1-to-1, then automatically you are being diluted by almost 50%.
Thank you very much for that. Let me now pivot to the market operators, other market operators in this panel session, starting with the CSCS. Mrs. Komolafe, can you just explain to us the role of the CSCS in the lodgement and trading and settlement of rights?
Thank you very much. CSCS is the market infrastructure around the depository clearing and settlement of the traded rights. We have a responsibility first from a depository point of view, and then also from the clearing and settlement section of it. Now, in terms of the depository, the first responsibility we have is to ensure that every transaction, every deal that is a trading right has the proper nomenclature. So we have what we call the symbol is properly named so that it's not mixed up with other transactions in the market. And there's also the ISIN. The ISIN is the International Securities Identification Number, which CSCS is the numbering agency in Nigeria for ISINs. That's a globally recognized identification, is a unique identifier for every transaction. So it's very important that that unique identifier is placed on every transaction so that there's no mix-up around what transactions we're referring to. Now, after that, you also ensure that these lodgements are properly made. I'm talking from the depository end of this, that lodgements are properly made into the investors' accounts in terms of these rights, because you need to actually have these lodgements in these accounts before you can even talk about trading them in the first instance. We also, so once that lodgement is done, then you also ensure that at the end of the trades, the buyer's position is updated, the seller's position is updated. That's from a depository point of view. Now, in terms of clearing and settlement, these rights go through the normal clearing and settlement process, which today is a T+3 for the Nigerian market. So transaction is done on T, settlement is done on 3 days after, 3 working days after the transaction date. Also, CSCS has responsibility to ensure that the issuer actually receive funds at the end of this transaction. That's also a major responsibility that we have. Now, around timelines, again, I've spoken to the T+3. The naming is done within 24 hours for the symbols, in terms of the symbols naming and the ISIN naming. In terms of the crediting of the issuer, that's done, and I think that Akim had referred to that, within 10 working days, which technically is about 2 weeks. So that's really our role within the market on this. Thank you.
Thank you very much for that very concise review of your role at CSCS. So moving now to another capital market operator, the registrar. So Catherine, I would like to hear from you, your perspective on your role as registrars, especially in this digital age that we live in today.
Thank you very much, Akim, and good morning, everyone. Good afternoon, good evening, depending on which part of the world you're joining from. Registrar plays a very key role in the right issue process, starting with supporting the issuers to get the approval of shareholders at the annual general meeting or extraordinary general meeting to go ahead with the right issue. Once this approval has been gotten, the registrar has the responsibility of generating the provisional right information. Since right issues are meant for existing shareholders, the registrar will have to generate this information and send it to the shareholders. Before, we use surface mail, but today we use digital channels through email, through phone numbers, through portals, through links, so that shareholders can get their details and then be able to make their choice as to whether they want to buy their rights, sell their rights, renounce their rights, or whatever option they want to take. And then once the offer closes, after it's been approved, once the offer closes, the registrar has the responsibility to ensure that the approved rights are sent to CSCS or any other depository that is applicable for the crediting of shareholders so that they can continue to enjoy their rights. So when there is trading, the registrar has the responsibility to verify the identity of the investor that wants to sell the right. This is just to help avoid a coincidence where you have the right being traded at some point and the shareholder coming forward to take up the right. That will create crisis. So that is the whole essence of verifying the identity of the person that wants to trade on the right. And once this is verified, it goes to CSS and the shares are made up, the rights are made available for the person to trade on. And then after that, the allotment happens, all the reportings are also done so that everyone is happy. Thank you.
Thank you very much for that summary. Let's now go to the regulator now. And Mr. Jomale, you spoke earlier, and clearly there is this expectation that the SEC will do its best to protect investors. Now, in a case where rights are being traded, I imagine that some people may also be concerned about potential, for example, of my rights being traded without my permission. So I just wanted to hear your perspective on the efforts of the SEC to protect investors during the capital raising process with respect to trading and with respect to rights issues in general, and then potentially also trading rights.
Yep. It's interesting that you'd focus on those because I actually did mention them in the course of the address, and specifically with regards to stockbrokers and trading. First of all, there must be a written instruction before a stockbroker can even act on any shareholder's rights. Secondly, there must be a sale order form that must be signed by the shareholder, indicating how many rights that they want to trade and which broker is allowed to trade it. Again, there's a requirement for brokers at the end of the issue, at the end of the trading period, to actually report to the SEC that this number has been traded over that period of time, and possibly who was trading those rights. So there are a lot of controls that are in place to make sure that the broker cannot just go ahead and trade the rights, or that rights will be picked up because the shareholders decided to do nothing and sold on that shareholder's behalf. And because, as was mentioned earlier on by Mr. Komalafe, that the securities are already registered with the CSCS, and there's a registrar in the mix as well, there is a clear track of who at any one point is holding on to the rights, who at any one point has the authorization to act on them, and who eventually did act on them, and where the shares ended up. There is a clear track at any point of the whole issue of what's going on.
Right. Thank you very much, Mr. Jomale, for explaining that point. Let me now go to the NGX and Mr. Abimbola Babalola. We are clearly seeing the NGX efforts to enlighten investors, especially through platforms like this. But let's talk a bit about how you are trying to make these investment products easily accessible to investors, especially using digital channels. And as we try and do that, we're trying to see how we can appeal more to the Gen Zs, the millennials, and so forth.
Yes, thank you very much, Wale. And let me say good morning to everybody. I think for those that have been following the effort at the NGX, you will discover that we started our digitization or automation journey, as far back as early 90s. And if you recall, you will discover that even trading in rights that we're talking about today was actually started in 1998, June 13 precisely. But today, as at that time, things were done based on papers. And we all know what is associated with when you are trading things with papers, inefficiencies, lack of price discovery. You cannot even, at times, you don't even receive your circular, and the offer itself has closed. So those opportunities are, you are not able to take advantage of them. But today, the exchange is gradually getting up to the extent of saying our processes are 90 to, let me say, 95% automated. We're not encouraging straight through process like CSCS and registrars mentioned. And I think my honorable commissioner also alluded to that, is that today you have a way of migrating your holdings in right. Once the symbol is created in CSCS, you understand, you have a way of migrating your holdings into your account in CSCS, because based on the platform that we have, even for you to sell, you must have those units of securities residing in your account, meaning you cannot even short sell. You can only sell what you have. It means that what we're seeing or what you're trading, you have effective supply and you have equally have effective demand. And today, most of the people, because we've also democratized access to our market, it then means that if you know the symbol of any security and you've succeeded in migrating your quantity that you're entitled to into your account, you can actually trade from your mobile phone. You understand? You can, for those who have access to our market, you can see the depth of the book. And also, we do what we call straight through process, meaning if you are selling your rights today and you subscribe to our direct cash settlement, your sales proceed comes to you directly after T+3. We've launched our USD numbers where you can use to get information. So everything that you see around the market is about leveraging on technology, even on the regulatory side too. We're also leveraging on technology to make sure that we survey the market, people trade, and they're able to settle. And one important thing again is like this right issue is 28 days, or let's say within the period for which the offer is open. Right. People can buy and sell. You understand? You can buy, you can sell, and the price discovery mechanism is there. So what we're saying in essence is that the technology is giving you every opportunity to minimize the period at which you can engage and also to take advantage of the opportunity that the platform can offer. You will see, pending approval, you will see that all what we're trying to do, even for every offer in our market, we want it to be 100% automated. We want to eliminate paperwork. With this, we believe we will remove inefficiency in the market, and price discovery will be there. People will be able to get value, and also they will have information to be able to take decision. Thank you.
Thank you very much. Let me go back to Akeem, because we have a few questions and we'll try and run through as many of them as possible. I would highlight two questions which I think you can speak to, and maybe somewhat linked to some of the points that Mr. Babalala just made. So one of our participants is asking, where is the first point of call if I want to sell my rights? Is it the stockbroker or the registrar? And also, in terms of selling that right, how do we determine the premium? So in other words, the price of that right transaction. Can you speak to that, Akeem?
Okay, thank you very much, Wale. I think the first point of call is the stockbroker, right? The stockbroker can help you to get through the help of the registrar, and we can help you to get your right circular. So if you want to sell, the stockbroker can guide you and then throughout the process. The renunciation form, the right circular, the stockbroker would, the existing shareholder will fill the renunciation part of the right. The stockbroker takes the right circular to the registrar for verification. Then after the verification, CSCS, credits the right. And, like Bablo said earlier, the process is automated now. We're making progress. I remember, about 10, 15 years ago where, the process was a call over process, where after, trading on the right, you have to take it to the ninth floor for noting and co. Then, we made progress, where, the symbol was created by CSCS, but although it wasn't really linked to the stockbroker's account. Now it's linked to the stockbroker's account. Is somewhat, more is a system that we can track now. And I think that's a significant process. Everything is somewhat automated now. We're making progress, and I think at some point this process will be real time. So I think the first call, right, is your stockbroker, and that's what we do. Then in terms of the pricing, there's something called, I had mentioned it in my presentation, theoretical X-right price, where you determine the price based on where the market is trading, the right price, and based on the pro rata basis. Although I also mentioned that the first trading, when the first pricing might be, it's just like a guide. At the end of the day, it has to, it's the forces of demand and supply that determines where it settles.
Right. So there will be some price discovery process there. Okay. Thank you for that.
Correct.
Let me go to Mrs. Komolafe now, and maybe you can clarify what happens in a situation where somebody is buying rights, and this is potentially his first experience investing in shares. So I imagine in that case, that person doesn't even have a CSCS account. So how would that work out? And maybe you can just clarify how that works out on the platform of CSCS.
Okay, thank you. A major prerequisite for this is that you have to have a CSCS account, and that's easy to do. You can do that through your brokers.
Right.
There are also online options for you to do that. So that's a major prerequisite for that. In terms of what you need to do, once you have that account with CSCS and the rights offer has been opened, the rights will go into your account. Now, if you are buying the rights and not that you are the initial investor, obviously you would have an offer from somebody who wants to sell. What happens is that what the consideration, maybe consideration is too high a term, the amounts that will be settled in terms of the right purchase at the initial right transaction is the premium amount. It's at the end of the offer that the actual consideration, the actual cost of the shares is actually settled among both parties. So if it's your first time, you've never dealt in shares before, the first thing is make sure you have an account through your stockbroker who have responsibility to ensure that the KYC is done. Once you've done that KYC part of it, once and your account is opened, then you can trade through your brokers, and then you would, at the end of the whole transaction, you would have the stock in your own position. Of course, cash will be settled. And I think that Mr. Babalola had also explained that there are various options around cash. The cash could either be settled to your to the broker, or it could settle directly to your bank account through the direct cash settlement option.
All right. If I can go back to Catherine, we have a question. Thank you for that, Ms. Komalafe. What is the timeline for the registrars in terms of verification of rights for investors who want to sell?
Okay, thank you very much. It's same day, because between registrars and CSCS, we have a portal where we exchange data. So on daily basis, either the materialized information or verified information are sent to CSCS. So it's same day as the day is received.
Right.
Thank you.
Thank you very much. And then somebody's also asking, I can just put this out there. I wonder if maybe Akim will also speak to this. Any fees for trading rights? So I guess they want to know what are the cost implications, or do I simply just see the rights price and that's it?
No, so the cost implications are very similar to what you pay, right? When you are buying and selling, shares. You have to pay SEC fee, you have to pay CSES, you have to pay NGX fee. So there's a fee. It's the same thing as what you pay when you buy the shares itself.
Okay. Someone asked that the price discovery is not clear. So maybe you can speak briefly to that. Like you rightly pointed out, it does appear as though it's a security, and the same way the prices of shares go up and down based on demand and supply, that is how it is discovered. But can you just speak briefly to that?
So there's a term called theoretical exercise price, which is, that's more like the traditional way of determining, price. But, more often, so for example, during the last offer that we did, international bureaus in this case, the trading started because if you're trading a right, there's really no trading band attached to it. So when it started trading, the theoretical extract price then was around, I think 35, 40 kobo, which started trading at that level. By the end of the day, we saw that when, there were a lot, we saw a lot of sellers of the rights in the market, and that dropped the right price significantly.
Right.
So that's the process. It's a function of demand and supply anyway.
And I think perhaps this is a good time to just point out that what we are trading here is the rights. It's not the shares itself. So if there is a public offering or rights issue out there, you pay for the right to acquire those shares. So you pay first for the right, and then you have to still pay for the shares. And so I think it's very important to point that out. So it's not like you're paying to buy the shares. So it's all part of their education. But I would like to have perhaps Mr. Ajomale chime in on this question. Are the fintech apps approved entities for trading in Nigerian stocks? Fintech apps such as Trove and Bamboo. And related to that, do the fintech apps have the mechanism to arrange rights issues for existing clients? I wonder if you want to speak to that briefly.
Very briefly, I'll say, unless they are registered and licensed to carry out a function, they cannot. Most of the time, in fact, all the time, you would have to register the rights onto an exchange, not with a broker. The broker is then enabled to operate on those rights based on the instruction of the shareholder. So the fintechs really, for as long as they are not, if they are registered as brokers, then you may trade your rights through them, to my understanding, but they are not an exchange. So there will not be any transactions going on their platforms. Also keep in mind that you will have to register on an exchange, and you have to get those shares dematerialized into the CSCS with, as Ms. Kamala has said, with an ISIN. So it is a separate instrument. In going through, I went through some of the questions, and some of them were asking about what is the appropriate price. And someone put in a number of 975 if that's the offer for subscription price, and 925 if that's the right price. So the difference of 50 kobo. Most of the time, and again, we're trying very hard to make a differentiation between the rights and the underlying shares themselves on which the rights are being declared. Normally, it is the difference between the market price or the offer for subscription price and the rights price that determines the price of trading those rights. So in this case, it will be 50 kobo, most likely, which is the difference between 975 and 925. That's what's being traded. And so that will go back normally onto the exchange rather than going to the broker.
Understood. So it's a very dynamic situation where companies are raising capital and these offers are live. So Catherine, I want to come back to you. Perhaps you can speak to this question. Someone is asking, if a company intends to pay interim dividends this year, will shares purchased during a rights issue be eligible for those interim dividends?
Okay, thank you very much. It all depends on the timing and the qualification dates for the interim dividend. If a company issues the rights today and the right is approved and credited, and the qualification date for the interim dividend comes after that approval, then the investor will benefit from the interim dividend. But if not, the investor will not. So dates for the qualification for the interim dividend and the approval of the rights issue is a very, very critical factor.
All right.
Thank you.
Oh, thank you very much for that. Another question, and I'll open this to the floor. I think anyone can feel free to speak to this. Someone is asking, how do I trade my rights when the stockbroking firm I used to buy the stock is under suspension? So what the impression I get is that the person has invested initially, he has the shares, that company is now in the market for a rights issue, and he now wants to purchase that rights issue. What are his options in that situation when the stockbroker is suspended?
Okay. Can I speak?
Go ahead, Catherine. Yes, go ahead.
Right. Okay. So in this instance, the investor is free to use another stockbroker. He is not stuck to any particular stockbroker. So he's free to get an account with another stockbroker and go ahead and trade on his rights. Thank you.
And thank you for that. But I think it's also important to perhaps speak to how things have changed as we are seeing a shift towards digital and paperless offerings. So Akim, do you want to add something to that?
Yeah, so beyond that, and thanks to CSCS, for an inactive house, right, you can actually use the CSCS portal based on the customer's instruction, and you move your account from an inactive house to an active house, and you do the trading. It's very simple. The process will only take less than 24 hours to complete, as long as the right information. So it's a very seamless, simple process.
All right, thank you for sharing that. Onome, do you want to speak briefly to that as well? Especially how seamless he has made it.
No, it is very seamless, and Catherine and Akim has spoken to that. I mean, we've already deployed this. It's tech driven. You can actually transfer, whether it's even active to active. For example, you may not even be satisfied with your current broker. Let's even assume that there's no problem and you just want to move your position to another broker. You can decide to do that. You also have issues of dead houses that are no longer existent, but maybe you had stock with them maybe years ago, or something that was bequeathed to you. You can also transfer to a current stockbroker. A broker is suspended. So it's a very easy to use platform, and it's literally in real time. So it can be done. So what you need to do as an investor is go to the current broker that you want to invest in. and they have access to this platform, and the transfer will be done almost immediately.
Great. Thank you very much for sharing that. I'm going back to Catherine now. Catherine, maybe you want to respond to this. Someone is making a point that registrars should have a platform where the stockbroker can send their renunciation forms instead of taking the hard copies to their office. So in the spirit of being more digital
Okay.
and making life easier,
Yes.
what's your response?
Yes. Yes, thank you very much. You don't have to take anything physically to the registrar. Registrars have portals where shareholders, stockbrokers can interact with them. So these things are online real time, straight through processes. And the same thing happens to the things that registrars have to send to CSS. So we use portals for everything. So please don't come physically to the registrar's office. Thank you.
Okay. Onome, do you want to speak to this one? After the offer has closed, what's the duration before client's account is credited? Sorry, what's the duration before the client account is credited with the, I guess, with the shares?
Okay, 5 days, a maximum of 5 days, so it could be less than that.
Okay.
But a maximum of 5 days.
Thank you very much. Another question, how can I consolidate my CSS accounts with different stockbrokers into a single CSS account? So this perhaps goes beyond the scope of what we're discussing, but Onome, do you want to speak to that briefly?
Okay, so it still speaks. So my understanding of that question is you have various accounts with various stockbrokers.
Yes.
So again, it's still within a transfer between a broker to another broker. So that same platform that we had alluded to or spoken about before now is the same portal that you use to initiate that transfer. You will just designate a single broker. And again, you will go to the broker who is the receiving broker where you want to consolidate to, and he will initiate that to all the other brokers to move your accounts to that single broker's position.
Right.
And everything is tech driven. There's no need for paper or emails in today's world.
Thank you very much. All right. Mr. Babalola, I know we've kept you out of it a little bit up to this point. I wonder if you want to chime in briefly about how the NGX is looking at the opportunity to engage more with new investors with the rights issues that we expect, of course, that a number of them will be issued over the course of this year.
Yes, thank you very much, Mr. Wole. I think for us at NGX, we just have to continue to engage the investing public through webinar and also all from other channels of educating them, because you will agree with me, and I think previous speakers have alluded to that, that the banking recapitalization is an opportunity. And if the market, we expect that these banks will raise about 4.2 trillion. And from what we're seeing, even if 25% of that will come the way of right, it means that we're talking about close to 1 trillion capital raise that will be focusing on rights issue. So that is why we feel that we're starting, this might be the first, because we have to create series of that to let the investing public knows that, look, the fact that you have a right, even if you don't have the money to pick that right, you also have an opportunity of selling your right to somebody else. You also have opportunity, and one thing that investing public should also notice that there's a current issue that we have today. You have the security is trading in the secondary market, the bank is doing a right, and they're also doing a public offer. When you look at this critically, on one instrument, there are 3 different prices. For those who understand, that is an arbitrage opportunity for them that they can leverage on. So what I would say to the investing public is that this is one in many of the series that will come. And also we are going to leverage on all our digital channels to still continue to educate them. We're not limiting it to that. If you also see, and that is a possibility, that by the time the banks are done with their own, there are other companies or other sectors that also want to come to the market, and they might want to use this right issue as a means of accessing capital in the market without being running as if one is predicting. If one is to leverage on history, you discover that as soon as we're done with banking consolidation in 2005, 2006, the next thing was the insurance company also coming for their own recapitalization. Maybe we might also see that coming in. So there are a lot of opportunities, and that is why we're starting with this. We'll continue to engage them. We'll continue to improve on the process, because by the time our e-platform comes on board, users' experience is also going to be enhanced in terms of them being able to do a lot of things without having to fill paper. Thank you.
Wow. Thank you very much. And I imagine that many people got very curious when you talked about arbitrage opportunities. So let me go back to Akeem. And just like you rightly pointed out, there are different prices out there. These are very dynamic offers. And when you begin to project where prices, for example, will go, maybe you can throw out a few scenarios to make people appreciate why they should pay closer attention to the rights issue, and then also for the potential of trading their rights.
Okay, thank you again, Wally. So I'll use a classic example of a company doing, let's say, hybrid, like Babu had mentioned. The stock is currently trading around 1110 at the moment in the market. You've qualified, you are a shareholder of record date, so you have access to buy. You have the option to buy at a reduced price. So what you can do is you can sell your holdings in the market, let's say at 11 naira, and buy those shares, some of those shares back at naira 75 kobo. And in fact, you can also as an existing shareholder, given that rights are issued in fractional rights, you can also use it to increase your holdings by buying the rights on the floor of the exchange, depending on where the premium is trading. So if the premium, as long as the premium is trading below the price which you sold after statutory charges, is a good opportunity.
Thank you very much. I would like to now go back to Catherine. And I think there was a question here that I wanted to draw your attention to. Okay, what happens when rights holders who have fully paid for their rights do not get their allotments at the agreed period? Now, maybe you can respond to that. What kind of scenarios could play out that makes that happen?
Okay, so rights are approved, and the moment they are approved, there is timeline set by SEC as to when people should be credited. So I'm just trying to think of what could lead to somebody that have applied for his or her rights not getting it, unless if that right is aborted or not approved. But once it's approved, and the reality is that once it is your right, you are sure of getting it once it's approved. It's only the additional that you may not get. So I can't think of a scenario where an investor will not get his approved rate.
The scenario that I can imagine is that, especially when we're talking paper-based applications, maybe there's some kind of error, something missing in the forms. But Akeem, maybe from your experience, and maybe Mr. Babala too may want to chime in. Now that we're going more digital, are there any risks associated with applying for a rights issue that could present a scenario where you have applied and you still don't get it?
To be honest, the chances are very, very, very slim, right? Because if you're buying it, if you're buying the right on the floor, right, just like you buying, let's say you buy normal shares and you discover your shares are being missing, it's digital, right? And it's something you can track. So you buy the shares.
Sorry to jump in. You are speaking to buying rights. I'm speaking to actually just applying for the rights issue itself.
Okay, sorry, unless the person did not apply within the timing, because right offers are timed. So if you send it after the offer has closed, then you will not get it. Thank you.
Understood.
Maybe funding. You just have to also back your application with the appropriate fund. But once you meet those two criteria, you fill the appropriate form, you take your quantity, and you provide the necessary fund, automatically it's yours.
Wonderful, wonderful. Well, I mean, we still have quite a number of questions here. I want to encourage our panelists to perhaps type in some responses as you deem fit. But for now, we really have to begin to wind things down, try and keep this event very efficient. We want to thank all our panelists for their very valuable contributions up to this point. And on that note, I'd like to now yield to Mr. Abimbola Babalola to deliver some closing remarks and thanks to our panelists and to all collaborators to this event. So I'll hand over to you now, Mr. Babalola.
Yes, thank you very much, Wale. But I think there's somebody that asked a question that maybe if we use Naira and Kobo, it will make this offer, this explanation. So I could quickly summarize that.
Sure.
So if you take the current banking offer that is on, the bank is offering their right at 9.25 Kobo, and they are doing a right of 1 for 10. So if you assume that as an existing shareholder owns 10,000 units of that company, it then means that if the ratio is 1 for 10, you are entitled to extra right to pick your right of 1,000 at 9.25 Kobo. Now, if we assume that the current market price in the market for that offer is 10 Naira, it then means that that right is at a discount of 75 Kobo. That is the current market price of 10 Naira and the right price of 9.25 Kobo. There's a discount now to you at 750, 0.75 Kobo, 75 Kobo. That is the spread that you are trading 1 out of 10. Then a computation will be done to determine what the buyer of those your rights, if you choose to trade your right. But if you want to pick your right 100%, then it's expected that you will cut a check for 10,000 times 9.25, which will come to 92,500. But if you want to trade that your right, what both parties will be sharing will be that spread of that 75 Kobo, and there's a formula for that. So thank you very much. Let me now go to the assignment that I've been given, which is to give the closing remarks. So I would say, distinguished ladies and gentlemen, distinguished ladies and gentlemen, thank you very much for participating in this webinar. Well, we're happy that you are able to participate in this, and we feel that the webinar had also provided an insight and contribution from various subject matter experts during the webinar. The learning from today's sessions have provided a comprehensive understanding of rights, how it is traded, and the benefit that individuals or participants can benefit from there. Today's webinar deliberately underscores the importance of trading rights as a mode of capital raising is becoming the preferred route among listed companies in Nigerian capital market. The exchange is confident that all stakeholders and participants have gained invaluable knowledge. We believe that today's event will act as a catalyst to enhance the participation of both retail and institutional investors in the capital market. It is the exchange aspiration that more participants will take the initiative to secure and leverage on the benefit identified from trading in rights in the Nigerian capital market following this webinar. At this juncture, I would like to reiterate that the exchange is committed to investors' education and capacity building. NGX will continue to leverage relationships and partnerships to organize webinars, workshops, and conferences to support market education and raise awareness for financial literacy. Because our belief is that we have the responsibility of protecting investors, and the easiest way to protect an investor is to provide them with education and the necessary tools for them to be able to take informed decisions, for them to be able to manage their investment and achieve their investment objective, and by putting them at the driver's seat. Lastly, on behalf of the Board of Directors, management and staff of the Nigerian Exchange Limited, I extend my profound gratitude to our apex regulator, Securities and Exchange Commission, ably represented by our Executive Commissioner for Operations, Mr. Ajomole. I will also, in the same vein, like to appreciate our esteemed partners, Chapel Hill Denham, Central Securities Clearing System, Ashon, Association of Stockbrokers as Houses of Nigeria, all other stakeholders, and investing public for their tireless effort in ensuring the success of this event. Your support and presence is very, very much appreciated. Thank you very much. Do enjoy the rest of your day. Thank you. Bye.
Thank you very much, Mr. Babalola. And again, I want to say a big thank you to all our participants. I see we have well over 500. I think we may even have had numbers closer to 600 participants from across Nigeria and across the world jumping in to get some perspective on this very important topic. Thank you so much for your participation. Many thanks again to our panelists for their interaction with the participants in the Q&A field. And thank you again to the NGX and all our collaborators for putting this event together. We look forward to having you at the next NGX Investor Education Series event. Have a great evening.
Thank you.